Hello traders and welcome back to our channel. On today's video we are going to explain and break down a highly demanded topic for you. The question, what is a liquidity level? I promise that after watching this video you will have enough knowledge and your question will be answered properly. Let's shift step by step to understand this principle by beginning with a basic concept. A support and resistance. As we can see here on chart we have a resistance level, price rejected this level 2 times. The market break above it and is retesting. We have also a supply zone that didn't hold, that is becoming a demand zone. It's the same principle of support becoming a resistance. If you trade this level, you could have here a 1.5 risk-reward trade. To be clear, the support and resistance in a sustainable strategy, and is the first chapter that you learn after you have discovered trading. But our everyday goal is to improve ourselves and our trading strategy, of course. This is why I am going to show you a more precise and advanced way of viewing the chart, and in the same time keeping the principles simple. The liquidity level is the same thing as support or resistance level. That's it. If you noticed a support and resistance level in our chart, you can confidently name it a liquidity zone. Why? Because above and below these levels is the most common area that traders, especially freshman traders, put the stop loss, which mean we have a lot of liquidity ready to be taken by big players and institutional traders. Liquidity is everywhere in the market. The market requires liquidity to move. It is considered the oxygen's needed in order for you to breathe. There are resting orders and stop losses at all the points I have marked on the chart. The market's algorithms are programmed to come get them. So, yes, liquidity is very good to be aware of, especially when it has been swept. Usually once it is swept and an impulse the opposite direction happens, it can be a great confluence to form a trade idea there, providing it is with trend and supported. As we can see below we have another support that we can call it now a liquidity level. And what we can see here is a failed break below this level, or what we commonly name it a fakeout. In the terms of liquidity principle, we can call this event a liquidity swept. So, in a nutshell I have presented to you these new terms, a liquidity level and liquidity swept. And you can easily make a parallel between this and the basic principle of support and resistance and fakeout that I bet you already know. The trend lines are a support or resistance level, and we will categorize them as liquidity level 2. On this schematic illustration, we are going to show different liquidity types that are in the same time as support and resistance types. The first one is double tops or bottoms. You can find this formation called equal highs or lows, as I always said, is the same. We can find on singular high or low, and the third type that I already mentioned at the trend lines. The fakeout below these levels we can call a liquidity swept. This liquidity swept can correlate with a demand or supply zone or imbalance zone. The liquidity above or below can increase the chances of profitable setup. In the following minutes, we are going to show them concretized on the chart. We have a clear consolidation formation here and a trend line respected from the price. As I recently explained, we can call it a liquidity level. A lot of traders have entered sell trades, put the stop losses above this level. And there it is, a liquidity level is formed. After highlighting and defining this level, we must look for an important zone like supply or imbalance above it. These zones are going to serve as potential entry level if price made a fakeout or swept the liquidity. We noticed here a fresh imbalance zone, and this is going to be our entry level, and target the demand zone below it. We can put a limit entry, which is risky but high reward, or waiting for candle rejection, with less reward than the first one. It's your choice, both has pros and cons. We have here another example of liquidity. The low that has been created at support zone is a liquidity level 2. It's the second type in the illustration that we made in the beginning of this video. We have a liquidity swept, following by another liquidity low, and liquidity swept again. We have here a demand level that failed, didn't hold the price, and now is a potential supply zone. Inside this zone we have another fresh supply and an imbalance zone. This confluence made this zone a potential entry for a high probability setup. Below we have another supply zone with an imbalance and liquidity below it. Being more precise, we have two liquidity that had been swept. We can enter at the upper edge of the imbalance that correlate with the demand zone, or wait for candle rejection and put the stop loss above it. The target in this setup should be the support level below, which is a liquidity level 2. And as we can see, we have a liquidity swept before price bounces in upside direction. The liquidity is very common, and you should keep a closer look, and of course, you should combine it with supply and demand levels. Let's clean the chart a little bit and continue. We have here a trendline liquidity level. The next fresh supply zone is located far above this level. We had here a break and retest of the trend line. Not every trend line breakout will be a fakeout, and vice versa. Before the price touched the potential entry level, it created a consolidation, a liquidity on both sides, and there we have a liquidity swept below, and price bounced sharply right after that. As we can see, the wick low correlate with the demand. Trading is like a puzzle. You just need to put pieces on the right place, and the picture will be clear. After the bounce, price filled the small imbalance above and touched the second supply zone. We also have a liquidity swept, a perfect combination for a high probability setup. We can enter at this moment or wait for change of structure confirmation. As we can see here, price broke the last higher low. That is the first sign of trend change. This is also a liquidity level, and we can categorize this event as liquidity swept too. Prices also build a liquidity level just below the new fresh supply on the top. That is our potential entry level. We can enter with a limit order or wait for candle confirmation again. We have perfect long-legged doji candle, and the bearish candle closed below the bullish one. We can use the previous liquidity as an entry level after the candle confirmation. I hope you have enjoyed the video. In my opinion, it's all you need to know about the liquidity levels and how to use them. Try to implement on your trading system and you are going to be surprised from the results.